Good morning, everyone who has joined and will be joining us. Welcome to our session, Africa Measuring Investment Impact. I'm going to let the speakers introduce themselves because I think they will do themselves more justice than I will. So I'm going to start with Paul Hailey.
Hi there. So my name is Paul Hailey. I am the head of impact at responsAbility Investments. responsAbility is an asset manager that invests only in private debt and private equity, only in the developing world. And we invest, as I said, for a positive impact, which is to say we look for a financial return, but we also aim to achieve a positive impact primarily via the areas of financial inclusion, so microfinance, SME banks, sustainable agriculture, and climate finance. And my position within that is to collect our impact data, to analyze it, and to communicate on it to our investors while managing our investees' impact.
Awesome. Thank you, Paul. And I'll move over to Evelyne.
Thank you, Samantha. So my name is Evelyne Dioh. I'm the managing director of RIC Capital, which is gender lens fund that was set up in 2019 by the Women Investment Club. The fund exclusively invests in women-led businesses, women-owned, in Senegal and Côte d'Ivoire. We target early-stage businesses and we invest in equity and quasi equity tickets ranging from 50,000 USD to 250,000 USD. So for us, the first impact we intend on having is gender equality, of course, but we also look at other social impact like job creation, development of value chains, of local value chains, etc. So I'm not an impact expert, but impact is key in our day-to-day activity, and we intend on measuring it from the beginning, the day we source a deal to the day we will exit.
Awesome. Thank you, Evelyne. And over to you, Aunnie.
Hi, my name is Aunnie Power, and I am a professor and an advisor in impact investing. I've been in the space for about 10 years and teach at the University of Oxford, the London School of Economics, and the University of Cape Town. I'm also in the midst of writing my first book, which will be out early next year. It's called Adventure Finance, and essentially it is designed for founders and for funders that want to explore their options outside of traditional venture capital and bank debt.
Awesome. Thank you, Aunnie. We look forward to that book coming out. Sounds really interesting. Okay, so I'm going to just start us off with, for those of us who are joining, welcome, Africa Measuring Investment Impact. That's what we're going to be speaking about today. So there's been a number of recent investments in Africa. For example, the recent acquisition of Paystack by Stripe for over $200 million, which is the highest investment up to date in Nigeria. How do we determine and measure what the impact of this type of investment means for the continent? And I will start with Aunnie.
Okay.
Not to put you on the spot.
So when we talk about impact investing, we actually, as both Evelyne and Paul said, we start with investors themselves having an impact thesis. So if we're trying to measure an investment that's been done outside of impact investing mandate, it's a little bit more difficult. But some of the common metrics that people look at are jobs created. Other things that often are looked at is around access. So with Paystack and with others in financial inclusion and technology, we'll look at how many individuals are gaining access to a specific technology and what impact is that having on their lives. One of the things that's become a really powerful tool in impact investing are firms like 60 Decibels that actually do cell phone surveys that ask people about their experience and the impact on their lives of specific products. So we might have one way to assess how the impact of Paystack would be to ask their customers, well, what has it helped them do better, whether those customers are SMEs or individuals. So there's both the remote in the sense of using data that is not collected by asking questions, as well as just asking individuals questions. So seeing what financial inclusion does for an individual around them being able to attend school, being able to afford food, etc. So that's some of the ways in which we think about it. Oh, you're muted, Samantha.
these Zoom calls. I'm going to go over to Paul and then over to you, Evelyne. But Paul, thank you.
Well, look, I would really echo that. I think in the last, I mean, I have been working in impact investing for the last 10 years. And during that time, I think, especially in the last 3 years, there's been a real step change in terms of what our investors are asking for when it comes to impact data. And that's driven by a couple of things. It's driven by the fact that increasingly you're getting more what are called blended products, which is where you have both public and private investors involved together. And so you have public investors, the development agencies, they tend to be more stringent in terms of their requirement for impact. It's also being driven by increasing harmonization around certain industry initiatives. So the operating principles for impact management, for example, the sustainable development goals themselves, and the impact management project. These are all types of initiative that have really moved towards that. And the conclusion is that when you look at a transaction now, I think the frameworks and the approaches that are there and the degree of sophistication that investors have with regard to these is much higher. And to put it simply, it's while there are more mainstream actors moving into the space of impact investing, you're still not getting, I think typically investors are much wiser now to the idea of impact washing and the risks of that. So what it effectively means is that when you are trying to work out the impact of an investment or a particular transaction, they really are looking for credible data. They want you to move beyond simply outputs, which is an example of what a company is producing, towards outcomes. What does it actually mean for the end investor? Now that can be on a practical level quite hard to obtain, especially when you look at a lot of the companies where we're investing in Africa. These are not companies that are listed companies. So the data availability is much less. Your ability to, it's a much more manual process to go out there and obtain the data. So I think one of the challenges, it's surprising how sometimes something as seemingly mundane as data and statistics can actually be so critical, because as long as you have certain markets where that data availability is lower, there's always going to be a certain type of investor that's a bit wary, either because they're scared, they don't understand, they can't able to get it. And so one of the roles of my role especially is to try and overcome this concern, is to try and overcome this fear and to put it across. I'm not sure if I've exactly answered the question there, to be honest with you, but I guess that's an idea of some of the challenges that are present when it comes to that.
No, that's really good, Paul, because I was going to go on to ask about what challenges you all feel these sorts of investments may have, and also opportunities. So you've touched on the challenges there, which is great. But I'm just going to go to Evelyne to just answer the first question, if you can.
So just to start with the impact of the PayStack deal, I see 2 points that are important that I would add to what Aunnie said. The first point is when we talk about impact, intentionality is super important, intentionality from the investor. So I'm not sure there was an intentionality of impact in this kind of transaction, but there is definitely an impact that can be measured afterwards. And one of them that we see is all the enthusiasm that is around this deal. Yeah, that is going to attract definitely more capital to the region. And this capital is going to go to deals that are really creating jobs, that are really having a social impact, etc., etc. So yeah, that was really I really wanted to touch down on the intentionality point. And yeah, I would like to see what Aunnie would think about that specifically.
Yeah, I completely agree with you, Evelyne. It's hard when there's no intentionality to be able to understand it. I suppose, if we're looking at a kind of macroeconomic perspective of the impact that these companies are having, we can do that. But I think, Sam, to the point that both Hailey and Evelyne have made, is that when we are talking about positive impact investing, we're talking about creating an intention for impact and measuring that. And so looking at companies that, don't have that intentionality, it's just a data collection exercise.
Awesome. And just to touch on what Paul was highlighting on about the challenges you feel Africa could face with the investments, is there anything that comes to mind?
Should I start?
Yeah, go for it. Jump in.
Of course, data collection,
Yes.
getting the data, and having like the right information, really exact information. For a fund like ours, it's easier because we are investing in markets where we are physically, so we can verify. Most of the businesses we invest in work with our accountants, so financial information is going to be exact because they are working with service providers that we recommended. So this is the first step for us to have the right data, financial data, to measure the level of job creation, measure the involvement of women, measure as well the impact of on value chains, like when you say.
You're frozen there, Evelyne. Not to worry, you can jump back in when you can. Okay, so Aunnie and Paul, I mean, with this subject, I'm sure you've got lots to say on it. Is there any other points you'd like to bring out at all?
Yeah, I mean, I think the thing is with challenges is that, getting good data is very difficult, but, I'm going to turn it into an opportunity. The continent is incredibly well connected from a mobile perspective. And so if we use tools that people have, like the mobile phones in their hands, and are able to create two-way data streams, in the sense that we're asking people for their opinions on products and services, but we're also giving them value in the sense that they're seeing things react to their needs and their desires, and they feel like they're being listened to. So I think there are a lot of opportunities. It comes down to cost often. So I'm sure Paul will say that one of the biggest issues is setting up the frameworks for impact, collecting the actual data, all of those people, all those things. The good thing is that in general, the way that the technology startups are moving, and just what COVID has done, has decreased that cost and increased the ability and the willingness of people to engage online. So it's going to be difficult to get the information, but I think using a combination of remote data collection, using satellites and sensors, along with using mobiles to be able to actually ask people's opinions, is going to produce quite a good set of data. And then it'll be about how we analyze it and the way in which we build the dashboards to be able to understand it.
Perfect, brilliant. And Paul?
Yeah, I would echo a lot of that. I think I think there's kind of several areas where you can see this. About 3 years ago, we actually quite substantially expanded the number of data points and indicators we were asking from from the companies that we finance or invest in. And I think at the time we were a little bit concerned about, well, are they going to be able to reply to all of these? And we were quite pleasantly surprised at the fact that companies were actually able to go from reporting on, say, a dozen or so indicators to, say, 80 or 90 with no fuss whatsoever. It was something that was done relatively well. And I think even we, in our position as a specialized impact investor, perhaps hadn't quite cottoned on to the fact that companies are, I think, much more open to this exercise now, culturally. I think we were anticipating some pushback, but no, they were aware. They were aware that this was something that was expected from them now. And I think also, frankly speaking, we underestimated their technical capacities as well. Now, there is still some variation. So if you take, for example, on average, and I speak very, very general terms here, on average, if you look at, say, a microfinance institution or an SME bank, they will have more sophisticated internal IT systems than, say, an agricultural cooperative. That's just the reality of what they do. But I would echo what Aunnie is saying, in that the possibilities that technology offers now is really very substantial. I think we barely scratched the surface on this. And when you couple that with the fact that just in the last, if you look at 2019, for example, there are some countries that experienced an 80% increase in connectivity in terms of the proportion of the population, especially in West Africa. Needless to say, that's going to have a dramatic change. You combine that with the catalyzing effect of COVID, and it's going to have a dramatic change in how organizations operate, and hopefully the data that's available. The only perhaps hurdle we will then have to overcome is that you do have organizations that, yes, they're using technological channels more and more, and I'm thinking again of microfinance institutions, but maybe at a centralized senior management level, the extent to which they're really completely up to speed with the possibilities of data and what they can get from it hasn't been completely internalized yet, let alone with us as investors as well. So I'm hoping that all of us can kind of learn from this, and that we can really try and harness that power.
Great, thank you for that, Paul. Some really good insights there. Evelyne, good to have you back. Not to worry. Not to worry. We were just talking about the opportunities and challenges these types of investments will have on Africa. And I don't know if you wanted to, in terms of opportunities, what you wanted to bring to that.
Yeah, I think Paul mentioned technology. I totally agree. This is a great opportunity to collect data. And I think one other enabler is just to keep talking about it and to keep sharing experience between fund managers to see what works, what doesn't work. For example, having talked with some emerging fund managers in Africa, we realized that a long list of indicators is not necessary and is not necessarily useful. It's more difficult for the entrepreneurs to complete, and maybe just focusing moving forward. I think one of the way to go will be to reduce the list of impact that we measure to make the process more efficient. So that, we're sure we have exact data and really reliable information.
I would actually add one point onto that. I think a lot of us, when we talk about the role of technology, especially in the impact investing space, our first thought is always with the investee companies. It's with the use of mobile phones. It's, we all think of M-Pesa, we all think of the many things. But equally, I think you can make the case that the role of the impact of technology on the investment space and of changing culture there is quite significant. So right now, between regulation and between consumer choice, you're seeing, first of all, a cultural shift in the investment space. Now people are aware that, as with anything else, as with your clothing choice, as with what coffee you drink and anything else, you can align your financial choices with what you want to do financially, with what you want, with your beliefs and your values. So there is that shift among investors, and then there is this increasing sophistication of the financial products that are available. The fact that you have more and more innovation when it comes to structuring products in a way that mitigate the risks involved, and that at the same time really ensure that you apply an impactful approach. So I would say, technologically speaking, or in terms of innovation at least, there's also been a corresponding shift in the kind of products that are available to actually have a really tangible impact and to really reach the Sustainable Development Goals.
Yeah. Thank you, Paul. Some good points there again. I'm just conscious of time. We literally have a minute or two left. Does anyone here have any questions? If so, please do put it in the chat, and we'll see if one of our speakers is able to answer that. And if no one has any questions, that's absolutely fine. I'm going to get some final thoughts or final points from each person. So you literally have 60 seconds to put your question in there. Whilst we're waiting for that, if anything comes. Aunnie, any final thoughts?
Yeah, I just think, one of the biggest transitions that we've made, I agree with Paul in the sense that in the past 3 years, it's been a big step change. But one of the biggest things that I've seen change is that founders of businesses are seeing impact measurement and management as impact data, not as M&E. And M&E is very much, what happens, let's, kind of go through post-mortem, whereas impact data is it's very live, and there's a huge feedback loop. And I think that, it really makes a lot of sense for founders on the continent that are creating what they want to be really relevant tools and products and services. They should know how they're affecting people's lives. If you're making claims about the impact that your product is having from a financial inclusion perspective, from how people enjoy using it, from the rewards that it has, you should be able to have this data to show for that. And I think investors, as Paul said, having a certain number of things they measure, but really being conscious that they should be looking for data that shows them how well these companies are doing. And that's how well they're serving their customers and the impacts they're having on their life. And so I think when I see founders make that shift to understanding that it's actually really valuable data they're collecting, as opposed to something that someone has told them that they must get and is an add-on, it just really changes how people think about impact measurement.
Yeah, I totally agree. Any final words from Evelyne or Paul?
It's important that founders measure the impact at the company level. At the investor level, it's also very important that we have the intentionality from the get-go when we are setting up the funds, knowing what effect we want to have on society, and defining these indicators from the beginning. And not because I have had experience in another funds where we started investing, and then 2 years after, we wanted to measure the impact, but we hadn't decided anything from the beginning. So it was really harder. This time we defined it at the get-go. We know what we want, and this is included in our due diligence. We know what we ask to the entrepreneurs, so that we have the base case, and then it's easier to measure like every quarter and then every year. So intentionality, methodology, and then yes, inspire also the entrepreneurs to do it at their level, so that its information can go up and we have more information globally, so that at the end of the day, there is more capital flowing in for the Genderland space or any impact investing statements.
Awesome, thank you, Evelyne. Okay, we have one question. I am conscious of time, so I know everybody has things to do. So are you okay to answer this one question? Maybe Paul can answer that. Is that okay? Awesome. This is a question from Ade. Ade, thanks for your question. Is Africa's data usage and data exhaust valuable? If so, how companies are coming up in the developed market that are monetizing data usage exhaust? How can we explore that as an investment opportunity in Africa?
Well, look, I mean, as Aunnie and Evelyne mentioned, there's the data itself has a lot of value for the companies themselves. They should be using this as a means to, I mean, I will pick the, Evelyne was mentioning about gender lens investing. Companies that, I mean, a classic example of this is companies that are selling, say, solar home systems in rural Africa. When they started to look at particularly take a gender lens approach and really start to look at, well, look, what is the impact on female clients? What is, what is making it better for us to, what is appealing more to female clients? When they really started to try and think about what works best for women in terms of, not only did it help them to have a better impact, but also it improved their marketing strategy significantly. So I think there is value for the companies themselves. In general, as I mentioned before, yes, there is a shortage of data when it comes to many markets, especially markets where there isn't really maybe a fully developed capital markets. I think any organization that is able to look at that and to provide data that is detailed and that genuinely speaks to tangible impact, there are going to be plenty of other investors that are interested, that want to move into impact investing, but don't necessarily want to build the infrastructure around it. Like, for example, 60 Decibel, which Aunnie mentioned earlier. Brilliant.
I hope that answers your question, Ade. I want to say a huge thank you to our speakers, Paul, Aunnie, and Evelyne. It's been a pleasure. Been really insightful. So thank you all, and we hope you enjoy the rest of your day.
Bye.
Thank you very much. Bye-bye.
Take care now. Bye-bye.